Welcome to the Deep Dive. We're the place you come to get smart, fast on complex topics. We sift through the research so you don't have to. Today, we're jumping into, well, a really fascinating area of alternative investment, fine whiskey. And specifically, we're looking at how one brand, Macallan, the sort of titan of single malts, has become a serious financial asset.
Yeah, it's definitely a hot topic, especially, if you're looking for ways to diversify your portfolio away from the, let's say, ups and downs of traditional markets. So our goal today is really to unpack the insights from the folks at Whisky.dk, Ulrich Bertelsen, and Henrik Olsen. They're real experts. We want to understand the mechanics behind why high-end whiskey, using Macallan as our main example, acts as this low correlation asset, why it offers some financial stability.
Right, and just so everyone knows where this info is coming from, Whisky.dk isn't some small blog. Yeah. They started in 2012, based in Denmark. They've got a huge 500 square meter showroom. They really track the craft and the e-commerce side of things. Serious authority here. Yep. So let's get into it. The fundamental case. What's shifted? Why whiskey? And why now as an investment?
Well, the shift really hinges on a classic economic principle: scarcity. It's all about scarcity creating value. Think about traditional assets like stocks. Companies can issue more shares, right? Governments can print money. Even commodities, well, you can usually mine more. Whiskey, though, has this built-in limit.
I mean consumption. Once the bottle's open, that's it. The supply for that specific whiskey just shrinks.
Exactly. Every time someone enjoys a dram, the total global stock of that particular bottle goes down permanently. It's a constantly diminishing resource, which naturally pushes demand, and therefore price, upwards over time, assuming the demand stays strong, of course.
And the numbers seem to bear that out. The sources mentioned some pretty startling figures, like a bottle bought for, what was it, 1,000 Danish kroner.
Yeah, about $145 today, give or take.
Okay, so $145 potentially turning into 5,000 kroner or more. That's a huge jump, over 400% in just a few years.
It can happen. That kind of rapid return is, frankly, often better than what you'd see in many traditional investment areas. It gets your attention.
Absolutely. And it's not just happening in one place, is it? This demand is global. Asia, Europe, the U.S.
Oh, definitely global. And while Macallan is sort of the poster child we're focusing on, this rising tide lifts other boats too. You see high demand for distilleries like Springbank, Yamazaki from Japan, Bowmore.
Interesting. So the whole category benefits.
Right. And if you look at the bigger picture, whiskey indices, these kind of trackers for the whiskey market, they've shown consistent double-digit annual returns, sometimes even outperforming things like fine wine, art, even gold. When you see that kind of performance, investors start to take notice. Seriously, notice.
Okay. Scarcity is the foundation. Performance is the proof. So for someone listening, thinking, all right, I'm interested, how do they actually get involved? What are the ways in?
Good question. There are basically 4 main routes, and which one you choose kind of depends on your budget, your risk tolerance, and how long you're willing to wait. The first, maybe the most talked about for quick gains, is limited releases.
Ah, the hype bottles.
Yeah, pretty much. Low volume, often individually numbered batches. Think collectible sneakers, but, drinkable. These can see really rapid value growth right after launch because supply is so tight and demand is high.
Makes sense. What's next?
Then you've got a strategy focused more on history, older releases. We're talking whiskey aged 20, 30 years, sometimes even longer. The key here is often finding bottles from distilleries that have maybe closed down or ones that dramatically changed their style of production. That history can't be recreated. It adds a unique, lasting value.
Like capturing a moment in time.
Precisely. Third path is all about uniqueness. Single casks. These bottles come from just one individual barrel. Every cask is different, so these often have a higher alcohol strength, cask strength, and a very distinct character that literally cannot be replicated. That one-of-a-kind nature is a big draw for collectors.
Okay, limited, older, single cask, and the fourth.
The fourth is the real long game. Cask investment. Buying an entire barrel of maturing whiskey.
But there's a catch with Macallan here, right? The sources were clear on this.
Very clear. Macallan does not sell casks directly to private individuals. So if you want to go down the cask route, you're likely looking at independent bottlers. And if you do that, the provenance, the documented history of that liquid, proving it's genuinely from the distillery it claims, is absolutely critical, non-negotiable.
That documentation point leads perfectly into the next big topic, risks. It's not all smooth sailing and soaring profits, I assume.
Not at all. And the biggest risks aren't necessarily market crashes like in stocks. They're more physical and logistical.
Okay, like what? You mentioned storage earlier. How serious do you need to be about that? Can I just, stick a valuable bottle in my basement?
Definitely not for investment grade. That's one of the key points from the sources. You need proper storage. Dark, cool, stable temperature. Minimal light exposure. Consistent humidity.
Why humidity?
To protect the label and the cork, and crucially, to prevent ullage, that's the slow evaporation of whiskey from the bottle over time. If the cork dries out or the label gets damaged, the value plummets.
So we're talking professional storage facilities,
Mm-hmm.
like climate-controlled vaults.
For serious investment, yes, absolutely. You have to factor in the ongoing costs of professional storage and insurance. It's part of the total cost of ownership. Many reputable dealers offer this service, or you use specialized third-party providers. It's not a casual undertaking.
Got it. Serious commitment there. What are the risks? Counterfeits must be a huge issue if the values are so high.
Massive issue. The incentive for fraud is enormous. So you have to be incredibly disciplined about where you buy. Only credible, reputable sources. You need that full, documented provenance we talked about, tracking the bottle's journey. This isn't the place for bargain hunting on random online marketplaces. The authenticity is everything.
Okay, so significant logistical hurdles and risks. But assuming you navigate those, the payoff is still there. The low correlation with stocks, the tangible asset.
Exactly. Despite the challenges, the appeal remains strong. You own something real, something physical. It tends to move independently of the stock market's jitters. And for many, there's a passion element too.
Let's pivot specifically to Macallan now. You described it almost like a luxury goods brand earlier, like a watch or a car.
I think that's exactly how Macallan positions itself, and very successfully. They've cultivated an image that puts them alongside Patek Philippe, Rolex, Ferrari. It's about consistent quality, perceived scarcity, and this undeniable heritage. It's more than just whiskey. It's a global luxury statement.
But isn't that risky too? If the global luxury market takes a hit, does Macallan go down with it? If it's priced like a Ferrari, does it, crash like one sometimes?
That's a fair point. Logically, you'd think so. But historically, Macallan's value has shown surprising resilience. Why? Two main things, I think. First, that genuine scarcity we keep coming back to. They carefully manage supply. Second, high liquidity.
Liquidity, meaning it's easy to sell.
Very easy, relatively speaking, especially at the high end. Macallan consistently sets auction records. Think of the Macallan 1926 Fine and Rare selling for millions. Those record prices create a halo effect for the whole brand. And because it's so globally recognized, a valuable Macallan can usually find a buyer somewhere in the world, even when other markets are shaky.
And a big part of that recognition, the sources say, is down to their specific production style. Something about sherry casks.
Oh, absolutely central. The sherry signature. Macallan invests, a huge amount of money and effort in sourcing the best European oak sherry casks, mostly from Jerez in Spain. They control the process from forest to cask to maturation. It's incredibly expensive, but it creates that rich, complex, fruity, spicy flavor profile that Macallan is famous for. That consistency is key to their brand promise.
So if you're an investor looking specifically at Macallan, how do you break it down? Are there different tiers of investment within the brand?
Yes, thinking in tiers is really helpful for building a strategy. The sources implicitly suggest about 3 levels. First, you have what you might call the stable tier. This is your core range. The Macallan 12-year-old, 15, 18, 25-year-old sherry oak, for example. These are widely recognized, relatively easy to buy and sell, and tend to offer steady, reliable appreciation. Good for stability, good for liquidity if you need it.
Okay, makes sense. The bedrock. What's the next level up?
That would be the high potential tier. These are the limited editions. Think of things like the Macallan Edition series or the classic cut releases. These are often released annually, generate a lot of buzz, and can appreciate quite quickly after release due to that limited nature. They add a growth element to your whiskey portfolio.
And the top tier, the really rare stuff.
Exactly. The rare tier. This is where you find the serious collector's items, the wealth preservation pieces. We're talking about the Fine and Rare series, the Red Collection, other very old vintage releases. These are the bottles that make headlines, set auction records, and are sought after by the world's top collectors. Very limited, very expensive, very long-term holds usually.
Let's make this more concrete. Talk about some specific examples. The sources mentioned the Macallan Horizon, the one they did with Bentley Motors. It looks wild. It's lying down.
It is visually striking, isn't it? And that's part of the point. With something like the Horizon, you're investing as much in the design, the concept, the collaboration, as the liquid itself. The horizontal bottle reflects Bentley's aerodynamic design. It connects Macallan to another global luxury giant. It uses 6 specific materials: glass, leather, oak, copper, aluminum, and the whiskey tying into Macallan's 6 pillars marketing concept. The ABV is even 46.6%.
So the story and the design are the value drivers, almost more than the whiskey.
To a large extent, yes. It's about manufactured rarity and cross-brand prestige. It becomes an instant collectible, almost independent of whether someone intends to drink it. That drives speculative value and ensures it's easy to sell in certain circles.
Fascinating. An artifact built for collecting. Then contrast that with something like the Macallan Red Collection. That seems all about age and heritage.
It really is. The Red Collection is like Macallan making a statement about its history and its ability to mature whiskey for incredible lengths of time. It includes some of their oldest official bottlings ever, 40, 50, 60, even up to 78 years old. These are incredibly rare, command huge prices, and are particularly sought after in, say, Asia and the Middle East. They anchor the brand's high-end reputation.
And they even brought in an artist, Javier Aznares, for the presentation, adding another layer of collectability.
Exactly. Take one specific bottle from that collection. The Macallan Red Collection, 50 years old. Distilled way back in 1970, bottled in 2020. 50 years in sherry-seasoned casks. The tasting notes alone, dark chocolate, dates, orange oils, tell you this is something special. That depth, that complexity that only comes from decades of careful maturation, that's what justifies the price and the intense demand.
Okay, let's touch on the Fine and Rare series, too. These sound like actual liquid history, like the Macallan Fine and Rare 1940, distilled during World War II.
A true time capsule. Distilled in 1940, aged 35 years, then rebottled in 2002. Only 420 bottles ever made. And what's interesting is the flavor profile reflects that era. The notes mention heavy burnt peat, dried fruits, vanilla toffee. It's smokier, different from modern Macallan.
So it captures a past production style. How does that compare to, say, a later Fine and Rare like the 1990?
Good comparison. The Macallan Fine and Rare 1990 is younger, only 30 years old. But it was bottled from a single cask, number 11233, at a high cask strength of 54.9% ABV. Its flavor profile is described quite differently. Much more honey, vanilla, peach, raspberry pie with some oak spice. Sweeter, fruitier, reflecting maybe a different cask type or just the style of that period.
So, same prestigious series, Fine and Rare, but different decades, different styles. Yet both incredibly valuable.
Precisely, because both offer that snapshot in time, that unreproducible piece of history. Combine that with the high age statement, the documented provenance, often the cask strength, and being part of that legendary Fine and Rare series, it makes them prime candidates for long-term investment growth. They tick all the boxes for serious collectors.
Okay, this has been incredibly insightful. So pulling it all together, what's the main takeaway for you, the listener, who might be considering adding some liquid gold to their portfolio?
I think the key takeaway is that whiskey investment, especially when you focus on strong, globally respected brands like Macallan, offers this really interesting mix. It's got potential for security because it's tangible. It often has high liquidity, meaning you can sell it relatively easily if needed. And for many, there's a real passion involved. It can be a genuine diversifier in your portfolio, something that behaves differently from stocks and bonds. But, and it's a big but, it demands knowledge. Knowledge about what to buy, where to buy it, and a serious, disciplined approach to storage and insurance. It's not passive.
Right, and maybe that leads to the final thought for everyone listening, something to chew on. Unlike your stocks, your bonds, your crypto, which are essentially numbers on a screen, the unique thing about this asset, the core advantage maybe, is that you can realize the return quite literally by cracking open the bottle. So what's the real risk here? Is it investing capital in those volatile abstract markets? Or is it buying this incredible, tangible, world-class liquid asset that you might eventually be tempted to drink yourself? Something to think about.